Credit is an agreement where a borrower gets money or goods or services now with a promise to repay it later, usually with interest. It allows people to buy things they can't afford right away, but they can agree to pay back the amount borrowed over the period of time. The credit economy is a system where borrowing and lending are fundamental to the economic activity. In this type of economy, people and businesses rely on credit to make purchases and investments, and lenders like banks provide loans to help stimulate spending and growth. Advantages and disadvantages of credit economy. So first is increased spending, business growth, improved standard of living, and flexible payments. And the disadvantage are the debt accumulation, interest charges, over-reliance of credit, and risk of default. So the foundations of credit are the credit worthiness. Lenders assess how likely someone is to repay their debt by looking at their credit history. Collateral. Borrowers need to provide something valuable, like a house or a car, as collateral, which can be seized if they fail to repay. Interest rates. The risk charged for borrowing money is also a foundation, as it compensates the lender for the risk involved in lending. Repayment terms. Clear terms for how and when the debt will be repaid ensure both parties understand their responsibilities. So next is the basic characteristics of credit. Repayment over time. Credit is usually repaid in installment over a period of time, making large purchases more affordable. Interest. Lenders charge interest as a way to make money on the credit they provide, increasing the cost for the borrower. Risk. Credit involves risk for both the lender and the borrower. Credit limits. Credit often comes with a limit to how much can be borrowed, based on the borrower's credit worthiness. What is a credit card? A credit card is a type of payment card that allows you to borrow money from a bank or financial institution to make purchases. The advantages are convenience, rewards and the benefits, building the credit and the emergency funds. And the disadvantages are high interest rates, deep risk, fees, and credit score impact. So the classifications of credit. We have revolving credit. It is a type of credit that allows you to borrow up to a certain limit and pay back over time. And when we have installment credit. With installment credit, the borrower agrees to pay a set of amount over a fixed period. And the open credit is the must paid off in full each month, like utility bills. If not paid by due date, the service is typically cut off. And next is the secured credit. This credit is where the borrower offers collateral like house or a car in case they can't repay the debt. And last is the unsecured credit. It's the credit that doesn't require collateral, such as most personal loans or credit cards. It's granted based on the borrower's credit worthiness.